Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, September 29, 2009. The euro-dollar pair extended its recent fall, adhering to a downward sloping line of resistance since hitting a top at 1.4850. The decline in today's session began in European trading as stocks there were lower throughout most of the European session. The pair hit a low near 1.4525 in New York trading, following a weaker than expected U.S. consumer confidence report. Today's low is a 3-week low for the pair and is a 50% retracement of the up move that the pair had been in during the bulk of September. The pound, on the other hand, rose in today's session. The pound-dollar pair tested the level just below 1.60, recovering from a drop in the pair to the 1.5825 area early in European trading. That set up an upward sloping line of support, with the pair trading in a small upward channel. There have been several counter rallies in this pair to the recent dominant downtrend. The UK had several releases today with a positive reading in an index of retail sales and an upward revision to second quarter GDP supporting the pound. The UK economy shrank 0.6% in the second quarter, the third and final version of these figures showed, which is a smaller decline than the previous release, which had the economy shrinking 0.7%. Manufacturing fell 0.1%, half the amount previously estimated, while construction declined 0.8% instead of 2.2%. The growth is expected to return to the economy in the third quarter. Concerns revolve around what happens when fiscal stimulus subsides, and if growth will be slow and protracted as a result of higher unemployment. A second report from the UK showed that conditions in the retail sector are beginning to stabilize, with sales broadly flat in the year to September. In the CBI survey for September, 39% of retailers said year-on-year sales volumes rose in September, while 36% said that they fell, resulting in a balance of 3%, a figure that was better than expected. And lastly, UK mortgage approvals remained around their levels from last month during August. There were 52,317 approvals, down slightly from an upwardly revised 52,404 in July. That marks the first time that approvals have declined in 10 months and could add to growing evidence that the recent revival in the property market there may have reached a plateau. Mortgage lending, meanwhile, increased by $1 billion, which helped to offset a $300 million decrease in consumer credit for a total net lending figure of $700 million for the month. The UK sales data was a catalyst for the pound to gain against the euro, which was pressured by weaker stocks. Yesterday, the euro-pound pair hit its highest level since mid-March at the 0.93 level. Plotting Fibonacci retracement levels from the recent swing low to high shows the down move of the last two sessions, bouncing up off support at the 61.8% retracement level. The yen weakened today, with the dollar-yen pair rising to test a level of support, now turned resistance around the 90.20 level. U.S. stocks, which opened higher, fell in late afternoon trading as a measure of U.S. consumer confidence disappointed. Today's high also matched up nicely with the 50% retracement of the down move seen the last week. Since we are at an important level, where we head next will be an important indicator for the direction of this pair. Turning to those U.S. releases, we see that the market value of homes in 20 major U.S. cities rose by 1.6% in July compared to June, the third monthly increase in a row. That put the annual decline at negative 13.3%, which is a better figure than expected. The data shows that the housing prices in the U.S. are now stabilizing. However, with the expiration of the first tax credit and increased foreclosures, could put more downward pressure on prices in the future. A second report from the U.S., the Conference Board Measure of Consumer Confidence, unexpectedly fell for the September period. The index fell to 53.1 from August's 54.1 and was mainly led by a decline in the Present Situation Index. Consumers viewed both current business conditions and the labor market slightly less favorably than last month, and still remain somewhat pessimistic about the short-term outlook and their incomes. Weaker consumer confidence going into the fourth quarter could mean a tough holiday shopping season. Tonight, the UK posts its consumer confidence survey. That is followed by Japan posting its manufacturing PMI and industrial production figures. Australia gets into the act by posting data on its leading index, building approvals, retail sales, and private sector credit growth. Overnight, Germany posts its unemployment change, and the Eurozone unveils a flash version of September's CPI. Tomorrow, the US will release its final version of US second quarter GDP, the ADP employment change, and its Chicago PMI. Canada, meanwhile, will release its monthly measure of GDP and its producer prices. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.